Hey, good morning, everybody. It's Hammer. Today is Thursday, March 19th, 2026. I, of course, am Hammer, founder of Originator Success, Grab and Go Social, and Rate Sensei. Three great products that help my originator friends do more business, get more loans in 2026. Be sure to check those out. Remember, also, you can join me live each and every weekday morning, 9:30 a.m. Eastern Time, broadcasting on Facebook and YouTube. If you're here live, say good morning. If you're watching on the replay, don't forget, give me a hashtag replay in the comments. Let me know that you were here. If you'd like a quick reminder that I'm going live, I send out a text each time I go live, and you could sign up to get that text absolutely free at hmmr.io/reminder. hmmr.io/reminder, or use this cool QR code over here. If you're on your phone right now, take a screenshot, go back to your photos later, press and hold that QR code, and it'll load for you. So sign up to get the text so you don't miss any of the show. Also, don't forget to sign up for our written lock advice, www.ratelockadvice.com. Get an email to your inbox each and every weekday morning. Also, days like yesterday show you why you want to be signed up for our text alerts. They're $7 a month. We sent out quite a few of them yesterday, but we normally send out one in the morning, one in the afternoon, and any time that we see either a nice improvement that we could see some reprices better to hold off locking, or whether things are getting worse and you want to lock before things get worse. So we did send out quite a bit yesterday with the Fed. We're going to talk about that today, but you can sign up for those at ratetextalerts.com. If you're here this morning, say good morning. I only see 12 people on this morning, but that's okay. We're going to keep rolling. Did the text not go out properly? Let me check. Finished. No, it says it went out. So anyway, well, we'll figure that everybody will be hopping on in a minute. Good morning, Angela Walters, Sean Segaloff, Jerry Avila, Michael Scott, Love, Vicky McSweeney, Tiffany Teal, and Tim Klyla. Ron Siegel says today is National Chocolate Caramel Day. Don't they call that a turtle? Isn't that am I remembering that correctly? Isn't chocolate and caramel, isn't that don't they call that a turtle when it's that? Someone in the comments, let me know. I appreciate that by all means. Good morning, Brandy Brickler and Wes. I hear something make a weird noise. So, all right. Anyway, let's go ahead and get started, and we'll get into all the good stuff. Let's see. Fire up the screens. We'll start off talking about the technicals here this morning. Let me pull up Presentify. Oh, that was weird. Hold on a second. Extra camera. No. Presentify. There we go. Okay. All right. So taking a look here, you see this giant red candlestick right here kicking our teeth in. That was yesterday. That was a brutal day. We had a previous low right about here, and it was popping up quite nicely. And then yesterday, we're going to go into all about the Fed meeting, oil prices, but why that moved the way that it did. This morning, we're at new lows for the year. Mortgage-backed securities down 15 basis points on the day, which, of course, that's bad. However, we were at a low of 98.51. So we were actually down about 30 basis points. So we've seen some improvement. So that's actually not terrible. And right now, the 10-year Treasury yield, 4.29, back below 4.30, which is where it was a moment ago. So quick recap, what happened yesterday. Let me see if I can zoom in on this. Let me refresh the page. We'll go over what happened yesterday. So if we look at bonds and we take a look, you can see that bonds were basically flat on the day, most of the day until the fateful 2:30 mark. So right here, 2 o'clock, you'll notice right here that bonds were flat and stayed flat. So there was nothing that happened after the after the initial Fed policy statement that led us to have any concern. Now, if you remember, going into the Fed meeting yesterday, I didn't think we'd see a strong reaction to anything that Powell would say, because I figured that markets were already pricing in maybe one rate cut for the year. However, that changed, and we are now markets. I have so many different things here. I got to see if I can find. Markets are pricing in no rate cuts for the year. So let's see. Hope rates hold steady. Powell wants out. Economy, jobless claims. Traders no longer price in any chance of a Fed rate cut in 2026. So that was kind of what took us by storm. And it was a much more hawkish Fed press conference, Powell, than was expected by myself or by markets. That's why we saw the reaction that we did, which was much stronger than what I thought we would see from that. So anyway, let's go through this all in a little slower motion here. Let me go ahead and make the screen back smaller again, and we'll go through this together. So yesterday, we could see bonds lost ground. We'll move this to red. As Powell started his press conference, bonds didn't like his prepared statements to begin with, right? So the first thing that happens when Powell does his press conference, he starts with his prepared statement. It's like 2-3 minutes long. And bonds didn't like his prepared statement right off the gate. It was more hawkish than what they were expected. Then what happens is they go through the crowd. The crowd is composed of journalists from, multiple media sources, including, say, Nick Timiraos over at the Wall Street Journal. And they get to ask a question or two, and Powell will answer them. So when you look at the reaction to that, things just went from bad to worse, and then it snowballed. Now, I was hoping to see some kind of a recovery this morning in bonds after losing so much late in the afternoon yesterday. However, we don't see that at all. And if you take a look today, things are still worse than they were yesterday. You could see here, and it's circling it in red. Let me bring this page up a little bit so we can look at this together. Hold on, bear with me a second. There you go. Pull this up. Okay. So taking a look here, you see that bonds are continuing to be much worse. What happened to my camera? Hold on a second. Let me try this. Can no longer. All right. Well, there you go. It's crappy, but it's me. Actually, I'm just going to turn the camera off for now, and we'll come off altogether. So anyway, rate sheet's still worse than yesterday. Let's make this full screen at this point. Take a look here where we ended the day with rates yesterday. It was ugly. We went from 629 back up to 636, which is where we were on Monday. Remember, last Friday, though, was the worst, and that's likely what will be today. We'll be matching those worst levels of the year for rates and for bonds. Mortgage-backed securities, this was the previous worst level. You could see today, this candlestick, we are worse than where we were yesterday. It came down again. These technicals don't mean anything. I know this purple line we could sit and talk about, hopefully give support and blah blah. None of that matters. That is all taking a backseat to what's going on right now, and we'll go through kind of some of these other articles and go through that, right? So, but taking a look here, you can see today, look at the long tail. The tail is this long, thin, skinny part. This is the worst part of where we were today. Right now, there's a small body. Let's just refresh that and see if that changes. Sometimes the chart is a little slow. So notice it actually turned green, even though we're down on the day, because it is much higher than where it was when we opened. We're at 98.75 to open, which was a loss, and it's a little bit higher than that. So it's actually a green candlestick now from that. But take a look here. 10-year Treasury yield is coming back down. So we're going to start the day cautiously floating, once again being ready to lock, and we'll see where things continue to go from here. Yesterday was a great example of one of those days where we needed to go ahead and just see how things played out. And we sent many different text alerts yesterday to keep everybody up to speed. Oops, hold on. I'm trying to get my camera back working again. To keep things up to speed. Let's see this. All right. Now let me just pop this up here. Hold on a minute, y'all. Okay, hope I didn't make you too dizzy. There you go. So anyway, taking a look, let's go through some of these articles together, and that'll keep us on track on where we are. Reprice risk on the day today is high. We absolutely could see some things continue to worsen. I'm also looking at your comments. Ron Siegel says, expect high volatility today. The POTUS roundtable with the oil execs will drive the market when they discuss oil production capacity, if they can drive oil down. Hammer can draw a happy face. Yeah, but I think actually there's going to be more on that. So Robert said, are we sure it's 2026 and not 2020? Yeah. Well, let's kind of go over there. Siegel said Powell thinks he will be the forever chair. It is called the Fed chair pro temp what is it? Pro temp. No, not temp. It's pro tempore. So it's the interim Fed chair if he does it. So all right, let's go through all these things together and kind of dress this up. So there's so many things to actually unpack here, and I want to kind of stay on it. So first things first, looking at where we were, right? So yesterday the Fed was hawkish in their comments in Powell's press conference. There were a few things that he said that shook markets up quite a bit. One of the things that he said was that he would stay on while the issue with the Department of Justice remains in play, until he has been cleared with transparency and finality were the words that he actually used. Now, remember, again, I know some of you are big Trump supporters, whatever, right? Trump caused this whole bunch of shit when he started this whole DOJ thing over the renovations. The renovation witch hunt is just another way that Trump is, the same dirty tactics that were used against Trump, which is why he's a felon and all the other crap, which that's all garbage. If you're a Trump hater, it's all garbage. But it's the same stuff that he does going back the other way. So he's got the DOJ investigating for fraud and, mismanagement because of the renovations to the Fed building, which if you've actually done any research on it, are tremendous. And you can see why they have escalated in price. Also with the amount of time that it's taken and the escalation in price, which we've seen in everything being done in houses and buildings. So anyway, I know the North Carolina's Tom Tillis, he is on the board for that would have to confirm the nomination for Kevin Warsh to take over as the next Fed chair. And Tom Tillis has said he's not willing to do anything to confirm Warsh until there's resolution to the whole witch hunt with the DOJ and everything going on there. Now, that has currently been, the charges there have currently been stopped, and it's on appeal. And the judge, but the judge is a big anti-Trump judge. So there's all different kinds of drama going on with all that. So there was a lot of questions that went in yesterday's press conference, and Powell said he would stay on as Fed chair pro tempore, which is basically an interim Fed chair. And he also said he wasn't sure if he would stay on as a Fed governor, even when he does step down as Fed chair, when his term is officially ended and he's not as pro tempore, because he would wait and see what he thought was best for the institution and the American people. So Trump may have a hard time getting rid of him. Also, before the meeting, there was a lot of talk that there would be more division in the ranks, that Mickey Bowman, that Waller would be more towards a rate cut. And they came back and said, no, that they were towards a hold. The only one, it was an 11-1 vote for leaving rates the same. The only one that voted to cut rates was Moran, who's a plant for Trump in the Fed, right? So that's the only, and he'll continue to be there until his seat is given to Warsh. I believe that's where it is, and the confirmation. So all of that going on, that shook up markets and the expectation of a rate cut for the end of the year. If you remember yesterday when we look at this, we'll use the compare feature. Check this out, right? So in December, yesterday, we were looking at the possibility of a rate cut being 60-40, right? So that there was more of a chance that we would see a rate cut by the end of the year. Now, markets are almost an 80% expectation that rates will be where they are now. And there's even a little bit of a bet that we could see the possibility of a rate hike. Now, Powell gave that feeling during his press conference yesterday. He said that there was discussion in the previous meeting, in the Fed meeting minutes, and that there was more discussion at this meeting of when the Fed would possibly have to hike rates. The reason that they're talking about hiking rates is because in the dual mandate, the big thing that's an issue is inflation. Inflation is the big concern. So that shook markets up. That's what is considered hawkish, is that number one, Powell is talking about staying on. And it's not that Powell will force himself on. This is not a Trump scenario. This is where Powell would stay on because of all the drama with Warsh and that confirmation not going through, because of the drama that was stirred up by Trump and the DOJ and all of that nonsense. So just remember, now I know that you guys, I know Siegel wants to get rid of Powell. I know a few people are anti-Powell, and I know that I'm a Powell fanboy. I think Powell has done a great job navigating the last 4 years. I really do. I think he has. So, but looking at where else we at, this is the concern, and this is the other reason. So we saw this jump in rates yesterday, and everything was attributed. By the way, look at this. We're seeing continued improvement this morning in mortgage-backed securities. And as they go up, that's a good thing. As we get closer to 10 a.m., instead of being down 30 basis points, we're down 13. That's a very good sign. It's a very good sign. But we are going to continue to see some crazy volatility in bond prices. And here's why. So the U.S. weighs military reinforcement as Iran, I like to call it Iran, but I still call it Iran. Iran war enters possible new phase. Now, they're talking here. This is a big thing. Trump considering deploying troops, boots on the ground to the Middle East. There's a lot of talk that the Strait of Hormuz will not be able to run properly until we have boots on the ground. And that's going to bring us to a whole new level. The other thing that's going to bring things to a whole new level, and let me see if I can find the article above it. Oil jumps above 119 a barrel. Now it's come back down right now. Let's see where it's at. Let's go to CNBC's main page here. Let's go to oil. All right. So Brent is at 112 a barrel. Now remember, it's still moving up. As this goes up, that is going to drive mortgage rates higher. Yesterday, we saw it start the day. If we put this at 5 days, right, on 318, 318 was yesterday morning. We were around 101. And then we closed the day yesterday at right around 109. So, I know that Trump, Powell is getting the bad rap, but part of that all happened here in the afternoon. Oil prices also pushed much higher. We had been holding steady. I know you see some movement, but overall, we've been holding steady right around that $100 mark for oil. And when we did that, you saw that mortgage pricing improved. This is where we saw bonds get a chance to improve. We hit this worst level here and we kind of came up. That was a good thing. Well, that disappears when you look at the fact that oil now continuing to go higher and higher. So as we go to this article, part of the reason it's happening is because Iran is attacking the facilities of Qatar and other Middle Eastern country allies, U.S. allies. They're attacking the facilities, the refinery facilities, the pumping facilities. So that is going to have lasting effects. The idea of, hey, when we stop this war, you see me use the quotes, right? Because it's a conflict. When we stop this conflict, we're going to see things go back to normal. Oil prices can fall. Well, the problem is it depends on if the Strait of Hormuz is operating properly. It depends if the facilities around there. The U.S. has been attacking Iran, but you notice we have not been doing debilitating strikes, eliminating their oil fields, because that would have a huge lasting impact that would ripple through the global economy and hurt everybody and everything. That's why you're not seeing that happen. And again, I should put a disclaimer on the bottom. I am just a country redneck out here in the Smoky Mountains in my barn with my barn cats, right? But this is how I see it. So when we're looking at all this, markets are also seeing things going to a next level. They're seeing increased attacks on facilities, the talk of ground troops coming in. That's driving everything higher. So we want to see today where things are at, but but I'm coming back into a locking stance because I think things can get worse. We want to see what kind of recovery we get today. And again, because we get volatility and it could help your pricing, but be ready to lock. And if we don't see any improvement, be ready to lock overnight. The outlook is getting worse again, that rates will move higher over the next few weeks and the next couple of months. So keep that in mind. The next thing we'll go on is the Bloomberg Iran attacks energy sites, defying Trump calls for restraint. And then Trump says, hey, when it comes to retaliation, we can blow up your whole oil field. We could blow up the whole south side of wherever it is. So this could all be escalation and make things even worse. Bond traders no longer pricing in any chance of a Fed rate cut in 2026. We've already addressed that and talked about that. And it's not that there's no chance, but right now, if you look at CME FedWatch tool, it's about a 75% chance that rates would stay the same. And there's about a 5% chance that rates would move higher. So it's about a 20% chance that we would see that. Selling jolts stocks, bonds as oil rally steepens. And that's, I know that Powell is going to get all the bad press today in the mortgage world about why things got worse. But this is actually the key right here is it's a 1-2 punch. His hawkish statements about inflation. He also pointed out that inflation before we saw the scenario with Iran was still not getting better fast enough. And this is a big problem. They're not going to cut rates with inflation being an issue, especially when we get things like this, where jobless claims declined last week to the lowest level since January. Powell threw out the term stagflation and was questioned about if we could see stagflation. And he was very clear in his belief that stagflation is a term that applied only in the 70s, and that there was double-digit unemployment and huge energy costs, and that he does not think stagflation is something that we're even close to considering. That's the view behind closed doors, and that's the view that Powell brought to the table. A couple of quick Wall Street Journal articles, and then we'll get out of here. Hegseth says no time set on ending operations in Iran. It will be at the president's choosing. Again, sorry to all my Trump-loving friends, but this is the part that's scary because Trump is very what is the word I'm looking for, where he changes his temperature every 5 seconds. I had it and then it went out of my brain, but he's mercurial. He's very mercurial, right? It's, hey, we're winning, we've won, and then we're going to keep blowing things up. So this is a lot of what is causing concern and uncertainty with markets. Also, this is a global issue. Europe's central bank holding rates as energy crisis mounts. And somewhere in one of these headlines was Europe saying this is not our war. They don't want, their economies are not going to handle it as well as ours is. Our economy will get through this. In fact, there was an article, I don't know if I have it out. Let me see if I do. There was an article saying that economists felt that oil would have to hit $138 a barrel and stay there for quite a while before it would drive a recession in our economy. Again, those numbers are all made up. These are just economists throwing anything out there. Don't give it too much credibility. Trump wants Powell out. Powell is digging in. We talked about this already. Fed Chair Jerome Powell says he'll stay on board until the DOJ probe ends, and he might stay on longer, not as the chair, but as a governor, because his term isn't over until, 2027, I believe, was when his term is over. So keep that in mind. That's not what Powell wants, or that's not what Trump wants to hear. And it didn't look like that's what markets wanted to hear either. Markets want to see Warsh and easing. Fed holds rates steady as Iran war clouds the outlook, blah, blah, blah. That's why, I think Powell said, wait and see a bunch of times during his stuff, because that's where we're at. So, and that's what you have to do. All right, let's go ahead and nail some of your comments. Sean said, Hegseth is asking for $200 billion for a war we were told was over. Right, I know. Ron said, if we put our Marines on Karg Island, oil prices will fall like Iraq or like Iraq. hopefully we do that then. Boots on the ground. Let's risk lives to correct gas prices that we caused in the first place. Sean, it's much more than that, though. It really is. Robert said, when I said, what do you call mercurial? He said bipolar. And I think that Rob Wilson also agreed, bipolar. Yeah, that could be fitting for that. Trump embellishes, but consistent in setting the goal and achieving it. Venezuela has already doubled their production. I don't know that I agree with that, Ron. I think there's a reason that the term taco was created. So we'll see. We'll see. And he definitely does embellish, but I don't know that he always has a clear. Powell's term is until 2028. Thank you. So it's more than 2027, it's 2028. I bet Waller will be the Fed chair pro tempore. I don't think that's how it works, but I don't know. Maybe, do you know something I don't know? Do they have to elect a Fed chair? And if the Fed members were to elect one, I know that I think they would stay with Powell, but I don't think that Trump gets to choose the pro tempore. Well, pro tem. We'll have to look that one up because that's a good question. But I mean, I would believe that since Powell's already taken a look at it, when asked, he said he would stay on as Fed chair pro tem. So for him to say he would stay on, he's usually very exact. So I don't think this is something that Trump would be able to put somebody on or has that choice. I think that it would stay with the status quo that it is the way it is now. He said that he would be on there. So for him to say that, I think it would have to be the case. But anyway, my friends, I'm going to go ahead and wrap it up. Again, we're cautiously floating, but don't get false hope. It's very likely that rates will continue to get worse from here. We need to be looking at locking loans that need to be locked. Again, the longer this continues, the higher oil prices go, the more damage done to facilities in the Middle East, the more that this is going to keep mortgage rates elevated for a longer period of time. So that's where we are at, my friends. We're not catching a break on this one anytime soon. Powell said he gets to decide, and you read that POTUS appoints the interim chair from the existing governors. Being that Powell is a lawyer, and I'm sure this has all been discussed, I'm going to go with Powell, unless I'd like to know your source. Powell, exact, like his budget for the new building. Oh, come on. Give me a break with the budget thing. And you look at all the stuff that building has had to deal with, and he's not the one. I don't think that he was the one that sat and wrote down the list of everything. So, all right, my friends. Well, it's 10 o'clock. Hammer's got to stop talking. And, today was a long show. Thank you for sticking with me. I noticed 50 of you are still on live. Appreciate you. Do me a favor. Make sure you go check out some of our paying products. Make sure you check out Grab and Go Social. If you need help building your business online on social media, go check out Grab and Go Social. Also, haven't talked about it in a while, but don't forget Originator Success. Go to Originator Success. Check out the overview video and find out how we help you get loans. Let me see, actually, if I can pull this up real quick. My friend Nathan Einkorn posted a wonderful post for us yesterday, which was really appreciated. Hold on, I'm going to all the library here, and his post. Let me go ahead and share this real quick. Share my screen, entire screen. Here you go. But he posted. Want to say a big thank you to the lenders that don't answer their phone. Thank you to Hammer for helping people find me on Google. And as I pointed out, we're also now helping you get found in AI searches. That is a big thing, y'all. We are killing it in this space. I see so much bad information out there. So anyway, we've run long. I don't need to market this, but go check that stuff out, my friends. And I'll see you guys tomorrow. Well, with TGIF tomorrow, we'll be wrapping it up and seeing where the week goes. So, but again, I don't think it's going to be a good week. And I don't think that tomorrow is going to be a good day. But right now, bonds are only down 8 basis points. They were down 30. So that's a great sign. Continue cautiously floating, see where things come out this morning, and see how much more recovery we get during the day. All right. Take care, everybody. Bye-bye.